Hi, folks. My name is Derek Washburn. I'm the Farm Management Extension Associate, NC Farm School Coordinator at the Department of Ag Resource and Economics at NC State University. This is my contact information. I'd love for I'd love to be able to help you guys as we just maybe you kind of already got a little preview for tonight, which is my goal is to be able to help you, which is what we're doing tonight. Jay and I both helping you think through what your actual costs are. And we're making some big assumptions tonight, which is, um, my big assumption for what I'm about to present to you is that you have a way to look at itemized costs for your farm and track them from year to year. So um, it's easier. That's an easy statement to say. It's a very hard thing to do. It requires discipline. It requires you put systems in place. Um, and we can do a lot of generalization and estimates, which is a great part about the tool that I'm going to show you. So even if you don't have real detailed record keeping, the tool that I have will do some basic estimation for you. And then we might be able to even look at some of your actuals and see, are we high, are we low? So I'm going to jump in and kind of show you this tool. But my big offer for tonight is that if you really want to take this and leverage it for your farm, I'm happy to give you an hour consultation where we can sit down and put this into place. My big request from you, though, is that you might go through this basic PowerPoint slide, do the steps in the PowerPoint slide, and try to incorporate this, adjust this to what you think your norms are. And if you can do that, we can take those numbers and then apply them towards your crops, whether they're seeded or transplanted. Another thing I'm assuming, it's not here, is that you're not an animal operation. So we are thinking you're likely a crop. You have crops, not animals as your main production. But if either way, we can go, like I have tools for animal production as well. So if that is something that you have, we can do that as well. Tonight's will be crops only. All right, so step one, what I suggest you do, Jay and I met last week and we kind of talked through the huge level of detail it requires to sort of come up with a per row assumption for what your costs are, thinking about shared cost on the farm. So equipment and facilities is one of those items that is a shared cost on your farm. You have trucks, you have tractors, you have tools, you have high tunnels, maybe greenhouses, a starter house. All of these things are being utilized in your operation and probably are distributed across all the crops at some percentage. And so what I'm about to show you is a method that maybe simplifies how you could come up with some more precise cost for equipment and facilities on your farm. So step one, inventory your equipment and facilities. And that's going to be, you're going to make a list of all your equipment, buildings, tools, coolers, trucks, irrigation, you get the idea, every capital asset. And there are some things that are going to be more important than others. Jay's going to cover, he's got the heavy burden tonight. He's going to talk more about things like labor, which are a larger percentage of cost. So these things are maybe less than a penny to the break even of your actual crops. So I got the easy task of we can ballpark and we can get pretty close. And so this method will allow you to get kind of pretty close, maybe even less than a penny to the break even for your crop. So do this, make a list, and then establish a purchase value for each of these items. If you file your taxes, this is something maybe you already do, and maybe you already have a list of, and that might be something you could utilize in this process. And the third thing you're going to have to do is decide a useful life for each item. And so I'll show you the nuances of the tool. There's going to be some more decisions you have to make. This is sort of the basic one before you download the tool. So next step would be go to ncfarmschool.com, download the capital budgeting tool, and I'll show you that in just a second. And then you're going to use the capital budgeting tool to update the capital items in the capital list tab. So you're going to basically transfer your inventoried items to the capital list in value. And I'll give you some basic directions for how to do that. Again, we could break this up. If you need help using this tool before we get to the next step, I can help you with that. Or if you feel comfortable doing this process on your own and then maybe contacting me and then walking you through the next step, we can do that as well. But using the capital budgeting tool to update the capital items in the capital list tab and then update the capital expense tab to reflect the equipment you use every year in your operation. I'm assuming there's some things that maybe just are gathering dust. So I would focus on the items that you're actually using. And maybe this is a good excuse to get rid of the items that are gathering dust. So if you haven't done this process, it might be a good time to do that. I assume that we're probably doing this for tax reasons or maybe even for insurance reasons. And so again, hopefully there's no added labor or effort on your part. And then the step 3, and I'll show you the reason why I've developed the tool as it is that we can compare annualized totals with your actual averages. So as some of you may have seen already, I was showing the repair cost reference and the remaining value reference. Those are annualized averages based on the life of your equipment. And I do realize that things actually happen, and hopefully you have an emergency fund or something stashed away for those things that are big expenses that come up that end up over time and averaging out over the years. But it'd be nice to have 3 to say 5 years of comparisons to be able to say, is what we're projecting close to your actual annual averages, or should we adjust the tool to reflect more or less based on your actual business model? And so step 3 is a way for us to look at some of I developed the tool as a way for us to look at that and do some comparisons. If you have those records, we can look at them. We can make some adjustments to the tool, and I'll show you how to do that. So that inventory list that you have are going to be itemized in some basic categories. That's my big assumption. So you only have to deal with the left side of this spreadsheet, which is fixed and variable. It's broken up between fixed and variable costs. So what you're seeing here is the fixed cost. Over here is the variable cost. Anything that you put on the left side in blue will repeat itself on the right in black font. So the general concept here, you make adjustments to the blue numbers, not to the black font numbers. And I wouldn't worry with these assumptions at the beginning. So we have a salvage rate, interest rate, taxes, insurance. I would leave those as they are. And then over here we have used tractor hours. Fuel, definitely adjust these to whatever you think your average fuel cost was for this past year. You can Google that real quick. I'm sure it will come up. So on-road diesel, off-road diesel. I would leave the maintenance cost and this the same. And then if you do pay labor to run equipment, this might be something you would include here. You can leave it off or on based on your preference. So, all right. So now you've done your inventory. You're coming into this spreadsheet and you're looking here and you're going, okay, well, buildings and structures. So anything in this category can be adjusted to based on what is on your farm. You can adjust any of these descriptions to what it is that you have. If you run out of space here, and that would be a place where like, hey, Derek, can you help me? But really, it's just a insert a cell. You could do this if you wanted to add one. You could insert a cell here. You could copy any part of this. So we'll copy this, and then we could paste. here, and then you could call it 1.01, which is why the reason why there's, and then you could redescribe any of these. So it's pretty simple to like add more if you need more, but I think I've included most of the basic structures, facilities here. Um, so that's that one. Real quick note, it's really important. So if you're adding a pickup truck, or if you're adding a trailer, if you're adding a tractor, that's really important, especially here. So if like, let's say this would be like a BCS. All of these would be like a BCS equipment. If you're adding BCS equipment, make sure you stay in this category. If you're adding any tractors, so we see here that's like there's horsepower listed, make sure you stay in this category. So all tractors would go here. If you need to add something, you have to copy and paste and add here. If you want to build this, if you want like an hour consultation for me to help you build this and you have your list already put together, I can do that. No problem at all. And you may find some repetition in this list, and that won't be a problem for the long-term goals here. So you'll see it's all categorized: vehicles and trailers, tractors and tractor implements, irrigation for fertigation equipment, production tools and supplies. If you have an animal operation, there's a way to do that here as well. Add some of those things. And then there's marketing stuff as well. All right. So the idea would be you put together that list from your farm, you'd come in here, you'd edit this to show what your inventory would be. And then you can go in here and actually build your actual fixed costs from your farm. So a key note here would be, all right, we edit this list, we make it look like what our farm is. And now we have to go in here and add those items to see which items we're actively using on the farm. And so you only have to do it once. So in this spreadsheet, anything that's done on the left side, you can see is done on the right side as well, automatically happens. And it's gray down here because anything you do at the top is also done at the bottom. So you only have to do those lists. You only have to make that list of items you're using on your farm once, and you come in here and add them. Okay,
So
so that's
there,
the step.
can we
Yeah,
just
go ahead.
real quick on that? So
We can go through those. We can go through these columns and show like what those things are for sure. But go ahead.
yeah, it looks like you just switch in between sheets there, tabs there at the bottom, between the capital list and the capital expense. I
Mhm.
just want to make sure that everyone sees that that's kind of how this is laid out. It happened. You're quick with that tab, so I just want
Yeah,
to make sure everyone caught that.
yeah. So yes, exactly. So this is step one. We're adjusting the capital fixed cost. So we're making the inventory list. We're bringing that over to this tab, right? And then now we want to look at what our actual expenses are, with the ability to adjust some sort of percent cost to enterprise for a crop. We don't have to deal with that just yet. Right now it's showing 100%. And I'll go through each of these tabs and explain like the definition of each of these. Um, but so far we made a list and we know what our purchase price is. Those are the two needs you have. You made a list, you know what the purchase price is. You come in here, adjust this list to your farm, adjust the purchase price to your actual purchase prices for the farm. Step one. Step two, we come in here and we build out our farm. So we only need to do it here. So we're using the fixed cost to build out our farm. We list all those things that we're actively using. And I'm assuming there will be, I just want to make a note here. There will be different use. Let's just say I'll use the tractor, for example. So we'll look here, the used tractor small. I know that in general, there's some distribution of this tractor as to the hours of use on this tractor for varying crops. And a lot of that will be based on the number of rows. And it could be a walk behind, it could be whatever it is. I'm trying to offer a way that we're thinking through very generalized cost, and then we can drill down later. So this is the step one where we're just going generalized cost, and we'll drill down later. Okay. So now that we're here, we made an inventory list. We adjusted the capital list to represent our farm specifically. Now we're adding items that we use on the farm on a regular basis. And so I'll come in here and kind of explain some of this. So here's our purchase price, our salvage value. So, and then we have a useful life. So our purchase price would be, whatever price we bought that original item at. Our salvage value would be the value of this item at the end of its life. And then we have to decide on a useful life. So in that capital list, and I even said that in the original, if you can come up with, okay, I'm going to keep this truck for 10 years, I'm going to keep this walk behind for 10 years, you can make those adjustments as you go. And it's just thinking through, how long will I be keeping this piece of equipment? How long will I be running this operation? So for a lot of folks, it would be like, well, I'm only going to be in business for 20 years. Or realistically, I'm going to use this piece of equipment for 20 years and I'm going to get a new one. So that would be the time that you put that in. So you got a new purchase price, you'll have a useful life. If you can do that at the beginning, that's really good. So we're coming over here, so we'll see a new purchase price, and then we'll see a salvage value. That is based on a percent that is decided here. So the salvage value rate would say, after 10 years, the $5,000 walk behind tractor is probably only worth $500, right? And we're going to make it, this is pennies on the dollar. So this is not a huge assumption that we have to make, but we're going to make an assumption here for some salvage rate. This is a good probably starting point. I've looked at the numbers for probably 10 or 13 years now, looking at like the difference between the salvage rate, purchase price versus like zeroed out. This is not as important as what Jay's going to talk about, which is labor. Getting this, in the ballpark is just fine. Ballparking labor is not fine. So we can get real close to pennies on the dollar of your break even as long as we're getting close here. And so we'll see a useful life. You'll have a number purchased, for example, rakes, shovels, hoe, etc. You can list a number as well. This would just be like an assumed number of about $55 tools that you're buying, etc. And again, we just need to approximate. We need to get kind of close. So I have a useful life, a number purchase, and annual depreciation cost. One note here that I'd like to say is depreciation is, and it's showing it here. Depreciation is this annualized cost that is the new purchase price minus the salvage value. So the recoup on whatever item it is at the end of its life, divided by the number of years that you're going to use it. And so this annualizes the cost of use. It's not the same as tax depreciation, which has a tax schedule, and you probably would go with a CPA, or you would be tracking that and by some means on your own. So the annual depreciation cost is like cost of use. It's not tax value. So they're two different things. So this would be a separate idea about actual cost. So the tax value allows you to take advantage of your tax status as a farmer. This is actual value, actual cost to your farm. So we're making management decisions on what we're going to charge for our crops. This is a much more important value. Also, we do interest. So if you don't have interest, you can zero that out here. We can go back to the capital list and say, well, no, I don't borrow money. I pay for equipment with cash. And so you could zero that out if you want. The other thing this will allow you to do, you can leave that in. It'll allow you a pessimistic idea of what I should be charging. It adds an additional 6% to the value. And so you could leave it in and say, well, I'm going to have to buy new equipment at some point. And so this could be recoup value, even if you don't buy equipment on loans. Annualized tax value, annualized insurance value, and then we have a total. And so here's that percent cost of enterprise to crop. We could say, if we wanted to look at a value, let's say here, we're looking at total fixed cost to enterprise. let's just say we had 10 crops and we want to look at if it was evenly distributed over those crops, we could look at what that value was and with a total value at the bottom. I'm going to go down and show you just a second as to how we would check. So that's step one. Create a inventory list, decide on a useful life, list like number of items that you have purchased, adjust these values based on some averages. One example would be, rakes, maybe they're cheaper and, you're just saying, I'm going to have to replace these. They get legs, they walk. So maybe this is more like 5 years. You got to make those decisions. So I buy equipment, I buy tools at like $35 a pop, $40 a pop. This is rakes, hoes, shovels, weeders, sort of things like that. And we could just sort of do some average. We have an inventory. We kind of know what the average cost is. We know about how many we have. And so just gives you a way to kind of look at that. So that'd be the way to utilize that. All right, I'm going to go down here and show you the bottom of this and show you how we might make an adjustment. All right. All right. So step two, we'd go to this capital expense. So we've done the capital list. We've done our inventory. We've done the purchase price. We've figured out a useful life. We've done sort of numbers on our farm. The rest will be calculated for you. You can leave it as is. And this is where it gets cool, is you can go down here and you can go, well, total value of equipment is purchased. So now we can look at, you can estimate, is that what I've invested in my business? Right? So now we'd ask like, okay, now we're looking at real numbers. So far what we've done this exercise is we're doing predictive things. And now we're looking at these total numbers as a way of a comparison to your realities on your farm. And are we in the ballpark? Are we way off? So we have this annual depreciation cost. Again, that's not the same as tax depreciation, but this would be your annualized total. This would not be a real number. You're not going to see that as a bill. So this is estimated. So if we were working together and I did a consultation with you, this is still going to remain estimated, and we might compare it to your what your CPA does or what your tax depreciation actually is, just as sort of a reference and think through that. The next thing we would do, we'd say, okay, well, if you are borrowing on loans, we could look at your annual interest rate, and we could look at, okay, is this what you're paying in interest on your farm? You're making interest payments. That'd probably be a pretty easy thing to track. One of the things that would make this, right now, I use a Bank of America. I have another bank that I use. I have a credit card. All of those things I could itemize and look at how much interest I'm paying at a year. So if you even had a dedicated account for your farm, we'd be able to sit down and you'd be able to give me some numbers on this just by going into an app and looking at some of this stuff, so we could see, are we getting close to your actuals for the last couple of years? And then we have annual taxes. Again, that's just taxes on property ownership. And then we have annual insurance, and this is one that's good. So my assumption is you're working with your agent. You have probably a list of equipment with your insurance agent. You're probably updating that on an annual basis based on what you want insured, what you don't. And we'd be able to look at your insurance payments with your insurance company, and we could see, are we high? Are we low? Once we're here, we could go in and say, okay, well, do we need to make any adjustments? Here's the total annualized cost. So we have $110,000 of equipment in value, and our fixed cost of ownership for that is $1,327.60 a year. If we're high or low, what we would do is we'd go back into our tool for the capital list, and we could start adjusting this up or down depending on if it's meeting your annual averages or not. And that will get us closer to the ballpark. But this is a good start. So even if you don't have records, this is a good start to be in the ballpark if you wanted to look at some of your break evens and thinking about those equipment expenses that are distributed across the farm.
Hey, Derek, we have a question in the
Sure.
chat.
Love it.
If needed, are you changing the price on the capital list and the capital expense tabs?
Yeah, so we would change the expense of equipment on the capital list tab. So here's what I would go in, and I would say, let me adjust this up so we can see. Yeah, so I would come into the buildings and structures. Let's just say I would say, okay, I do have a packing shed. Maybe this isn't the exact specifications of my packing shed. I could change those specifications. And then I would say, no, I know what I spent on my packing shed. I had a contractor do it. That cost me $60,000. I remember that specifically. There were some delays, that sort of thing. And so I would come in here and put that. And maybe my packing shed isn't 20 by 40. Maybe it's more like 15 by 15 by 30. So I could change those specifications to match my situation if I wanted. This number is more important. And the other number was really important is, this structure is going to last for 25 or 30 years. So we have some starting points in this budget already listed based on kind of what I already know to be kind of the useful life for these items. Um, and and then I would have some sort of salvage value at the end, like, what's the value to this property at the end of all this? Um, the assumption is we're using up some value, which is pessimistic for a lot of this stuff. If we go to sell a property that has some of these, this would be considered kind of an improvement unless it's run down. So if you are keeping it up, this maybe will be pessimistic in terms of estimating costs, but I'd rather be on the idea that we're going to have to be making repairs. We're going to have to be working. This packing shed isn't going to be perfect for indefinitely. We're going to have to make some improvements after 25 years. So that's sort of the assumption. So you would come in here, your capital list, you're going to make these adjustments, and then you're going to build your farm here. So any number that is here, you're going to list here. So as I'm going through and updating, I probably have a piece of paper, and I'm going and I'm looking and I'm saying, okay, capital list. This is number two. I do have this 15 by 30 packing shed number two. I'm going to say it's number two. I'm going to list it on my notes, and then I'll keep going and updating, and I'm going to keep building that list. So those numbers that you're building need to be listed here. And then once you list them here, they will be, all those things will automatically happen for you down here. Everything gets tabulated for you. As long as you update the capital list and you update the purchase price, and then you list those items here, everything automatically gets totaled for you. Yeah, so you can see right here, for all the tabs are all there. It's just a reference for how that builds it. And then it'll do the same thing, by the way, it'll build the same thing this is really cool. It'll build the same thing for you at variable cost. And then we can start asking the question, is this sheet approximating our enterprises or our farms total cost? So again, we got to repair these things, and there's a total. And someone would ask, like, well, why is that there, Derek? Like percent. And I don't assume that every item that you have on the farm may own it, but the farm may not use it 100%. So you may share it with someone else, and they help you with some of these costs. These are some of these variable costs that you might say, well, I own the piece of equipment and I have the cost of ownership, but I don't use this particular piece of equipment to my farm 100%. Maybe it gets used for something else. But good example would be, the best example, I think, would be, let's say this pickup truck. So let's say I know, for example, like I have personal miles on my vehicle and then I have business miles on my vehicle. And so it's about 50-50. So these are the annual hours, miles on my truck. I know that I'm going to drive 20,000 miles on my truck this year. So well, no, we don't do it there. We do it over here. We'd have to make that decision over here. Let me show you how I do that. So variable cost over here, vehicles and trucks. So I know, let's see, this is 0.5. This is this one. I know I drive 20,000 miles a year with my pickup. And so we come over here, there it is. There's 2,000, not 20,000. We had another zero. 20,000 miles on my pickup. but I don't use it all for business. Let's say 80% of what I do is for the farm, 20% other mileage. Now, technically for tax sake, you have to track this, but for cost sake, we can make some assumptions. So that's what we're doing here. And so then it would say any of these other costs that are being associated with the vehicle would now be associated based just 80% for that percent. So we'll say 100 for now, and then we'll say 20,000 miles. So that's what that column is there for. Better than the changing that around. I like this because we can actually see, well, what did you spend on total annual repairs and maintenance for the farm? Is this in the ballpark? Is that close? Are you more? Are you less? Why? Did you have a major breakdown? Did something happen? Is last year an anomaly? Sorry, an anomaly. So that's kind of the question. Is this is what we're using? These are numbers we can use to start assessing. Are we in the ballpark? Total annual fuel cost. This is that's the total. Okay, this would be oil changes, grease points, and then there's the annualized cost based on well 10%, 100%. This is 100% of the value. There we go. $8,000. So now I'd ask you, like, hey, is $8,000? Is that what you spend on repairing equipment and fuel and oil changes and grease guns, grease points, that sort of thing? And so now we can start to ask the question: is this in the ballpark for our farm? And now we can do a couple things. We can project next year, so we're close. Maybe we're close to actuals. Last year may have been an anomaly. The last 5 years, if I were kind of pull up that and average that, we could come up with some ideas of, are we in the ballpark? And now we're in the, okay, we've just finished this. So we're just looking at capital expense that has to be distributed over the farm, over the enterprises that we grow to some way or method. And if we wanted to start to think about it just by crop, we could say, well, I plant 50% of my acres is tomatoes. And so now we could say, well, tomatoes has got to pay that bill, right? Tomatoes has got to carry that cost. And we could say, well, 50% of my acres in tomatoes is I only plant about an acre of tomatoes. So now I know I have $8,374 roughly in fixed cost to attribute to tomatoes. So that's sort of my method of building equipment cost and doing an inventory and thinking about what my actuals are for my farm. That's just one distributed item over the farm. We could also say marketing, and then Jay will talk about labor. Labor is going to be more specific. All right, so where we're going with this is here's the capital expense and the capital list in the background of this budget. We do have a way that if you can do the capital component for your farm, we can add these spreadsheets in and start to look at specific break-evens based on these costs. There's a lot of other things. So this is the capital fixed cost share, the capital variable cost share. The only cell that we have worked on in this presentation so far is this cell right here. So the capital expense carries over. If you can do that homework and go through and build your farm out, I can show you the next step, which is how to build specific crops, and then we can start to talk about break evens for specific crops for your farm. Jay is going to work on this thing of labor, which is, by the way, we can go where all this is. So if you go to NC Farm School, you go to resources, small scale budgets, the capital budgeting tool that I just showed you is here. All these individual small scale vegetable budgets are here. But if you can do this component and you want to build out your farm and look at some of these other crops, it's not a hard jump to be able to do that. And so we can start looking at to individual break evens. And so, and as you can see, I mean, look at the bill for labor. This is just, yeah, we're looking at harvest, for example. Harvest, just your harvest cost is as much as any of the variable costs that would carry over for your crop. And so this is probably going to end up being something like 20 to 40% of your total farm costs. So getting a handle on labor is way more important than what we're doing here, which is why I do this generalized method of doing cost. And then the way these budgets work, they're sort of all the same. And really, when we're looking at individual crops, we're really looking at, okay, what do we spend on? Are we doing transplants or seed? And then the next part would be we're looking at like a POS system, like what did we sell for the year? So what did we harvest and what did we sell? Um, so um, I'm not going to dig into this. Don't have time for that. But that's the equipment cost component. And then I'm offering myself to you to help you through the next step if you want to do that together.
You know, trying to figure this out, trying to figure out our farms. I love the way Derek, provides this structure that you can really dig into. Mostly I'm thinking about, well, this is the kind of stuff that, a lot of us, if we're doing GAP certification or organic certification, we got to make these lists anyway. So this is a great structure. And the fact that you can work the numbers into it as well is really handy. And we're wanting to figure this out, we're looking for our advantages in the market. I think that's, one of the biggest things that the farmers are looking for out of this is like, I want to find out like what's making money, what's going to be the thing that works for me, or like, am I missing something? Do I need to figure out what's not working for me? And we're all limited, space, labor, capital, and so trying to make the most out of that is crucial. Um, when you start into this process, like as you might have felt, I have felt personally, like, the spreadsheet is kind of intimidating. It's big with, we deal with these Airtables and spreadsheets a lot, and it's or if we haven't dealt with it before, it can be even more intimidating. But starting simple and starting with maybe just one crop that you're going to work on for this, or just like focus on that one area of listing out all of your tools, equipment, infrastructure. Um, that's just that first step, and it is a one step at a time thing. And when it comes to costing, sometimes just looking at one crop can be a lot easier, especially when we get into the realm of doing our time studies. Labor is the big one. Obviously, there's machinery, there's materials, there's supplies, but you know, um, you can see that the numbers on labor. We know that the cost of labor is high, and it's I want to emphasize that sometimes as farm owners, we don't do the best job accounting for our time, and I think in order to really kind of see your future as a farmer and see it sustainably through, trying to figure out to calculate your time and figure out ways that you can delegate and farm, but still have um, a healthy life balance with your work. Uh, that's my soapbox speech about overworked farmer. Um, anyways, getting down into the nitty gritty of these numbers, this is a list, just like we've been talking about. And it is a recipe for producing a bed of carrots. I like the idea of a recipe for doing some of this work. It's easy for me to think about. I started out food on the chef side. So, listing out your steps for producing that crop. In this case, I like to start with these direct seeded crops, and something like carrots. What am I going to have to do to the field prior to planting? Um, what are the steps during the season, and then what are those harvest and post-harvest steps. In addition to making the list, and I'm pretty sure that Derek's spreadsheet for costing will let you put in how many times you expect to do that activity during that pre-harvest production period. So if it's, weeding by hand, for example, how many times is that? And you know, when it comes to measuring that, we know that weeding some days takes so long, weeding other days takes some can take much longer. So we want to again, we were talking about doing time studies. We want to try to figure out, like, as best as we can, um, the most accurate time that it takes, and try to um, the outliers might be something we have to not include in our data. We want to find, like, the more average time it takes. There's just a few things that I wanted to have folks take away this evening. And one of the big ones is, okay, measuring this labor activity time, taking these measurements. Uh, I personally like to approach the actual physical timing of these activities so that I'm not necessarily including, let's say, the drive from the field to the pack shed is not for me what I'm going to include in my harvest timing. If I'm harvesting timing, I'm going to harvest from the moment harvester enters the field and let's say packs the truck up, or it's a group of harvesters that are out in the field. They pack the truck up, and then we say, okay, that's how long it takes to actually cut and harvest that crop. And so, um, you know, that green box there, would the time this field labor activity take increase or decrease if there are more or less beds of the crop, or increase if the beds were longer and decrease if the beds were shorter? So if you are spreading amendments, is it going to increase if there are more beds or more fields? Yes. But for example, hooking up the spreader is not going to change whether you're doing one field or two fields. So that is where I kind of think about, like, um, that sort of overhead labor. Like, no matter what you're doing, you're going to be doing that. But if we're looking specifically at, that those carrots, let's try to narrow our view and see exactly when we're actually working on those carrots. And that's coming through to the harvest question: would the time this harvest or post-harvest labor activity take increase or decrease if there are more or less crop units of the crop? I think identifying this is also a way to figure out how you want to be more efficient. Because if you know that it doesn't matter how many cases you haul out of the field to drive to the field, let's say, then you're going to always want to make sure, like, that time is maximized, and that you are coming back with as full a truck as possible. And before you leave, you want to make sure you have all the things that you need, so you're not doing this. I mean, how many, raise your hand if you've ever been just have those days where you feel like you're just going back and forth. So the more we can kind of organize our labor activities around those aha moments when we do these studies, I think that's a big part of it. Figuring out how you can save. I can talk just a little bit about some strategies for making this work, because I feel like, old habits die hard and new ones are, slow to birth. So do yourself a favor. If you are going to be trying to record the labor that you're putting into, even starting with the big ones like harvest, that's the big number, harvest and post harvest. Keep the tools that you need to do that handy, and try to make it a part of just the program. You don't have to be timing everything all day long, but when it's handy and you're ready to do it and you have the cues, the signage or the whiteboard or whatever that's reminding you to do it, you work it into your day. It's not a big deal to press start on the timer on your cell phone, um, harvest, some lettuce, press stop and see how long it took you to do that. One thing that I do, you know, want to say is as far as working with your team or working with others, the accountability piece that I'm showing here on the slide is important, but especially with your team members, I've run into it where workers felt like they were being tested or that they were being, it was like you know, a productivity test on them. And I think it was kind of difficult to get folks to adopt it because they were kind of thinking that this was going to come back on them. And so just, I think laying the groundwork, if, this is new to your operation, making it really clear, like, I want everyone, more than anything, you don't want anyone to change the way they work. You want them to work just like they always do, because what's the point of getting a time study where everyone was on fire or everyone was, creeped out because they didn't know what was going on. So yeah, just try to get the real numbers and you know, you might be a little bit of a culture building on the farm. And then, of course, consulting with folks like Derek, you consult with myself. I do market access work and similar programs like tonight, through my work at CFSA. Um, Work with each other. I was just talking to a farmer today. I was like, "Who are your farm buddies?" And he was like, "But I don't know. I don't really have any buddies out here." And I was like, "Well, goal for 2026 is get some buddies, even if they're doing something a little different. Um, we have got to be sharing information. There's no advantage to keeping it under your hat, and I know most people with any experience in this business are more than happy to share. So that's my like sort of parting words. I will add one more thing since I have one more slide. It's just
Yeah, that's
words,
good.
but I talked a little bit about labor, and again, the other big takeaway is that labor is your big expense, but these other things, trying to itemize them, um, and think about, how that breaks down, um, especially those post-harvest items. I think a lot about my experience prior to CFSA. I was a organic berry grower, so I had a lot of clamshells in my life, and always trying to keep like look for that, like, where's that 8 cent clamshell, or that not, it's like I don't want to pay 11 cents per clamshell. It's like I got into that because I realized that once you start adding that post-harvest piece, your margins can get real slim, especially in that wholesale world. And you know, I've definitely done it. Classic rookie mistake is take a price that's, below that break even that Derek's talking about. Not having the savvy or the experience to know how to do that. I was just a price taker. And if we do that for too long, it can shorten our wholesale careers. It's those can be pretty hard hits. So make sure you also um, know your market side of the equation, because production is great, but finding the right market is really key right now. It's a challenging time, and I hear a lot of growers just talking about how they're trying to find new ways to market and find creative ways to market that keep those costs low, because production costs have gone up.
Let me share. I'll share this because I think it's a good reference for what you're talking about, Jay. Let me share. Okay, so this is tomatoes, for example. Okay, and so let's just say we're deciding on, and to your point, Jay, retail, wholesale, two different. probably cost structures in terms of marketing. So we account for retail versus wholesale marketing cost. But we're going to have a yield, you know, we're going to have a row size, and we're going to have a number of rows in here. In here, we're going to talk about, you know, some of these variable cost items. But as we go in and we start looking at these numbers, you know, I brought up the conversation Jay and I were talking when I worked I worked for a landscape company, and the landscape company had a data entry person. So there was a person dedicated to doing data entry. And then as an employee, I had to record what job I was at and what my activity was. And every job had a code and every activity had a code. And part of my job was to record, here's where I was at, here's what I was doing, so that we could record, okay, the employee was doing this all day, and then these were the recorded hours and the applicable job codes. And so I would say when we're looking at labor and we're looking at, you know, how we're going to develop our systems, you've got to develop your own system to where it becomes a part of your routine, your personal routine, and then also your employees' personal routine, where these activities, and I think that here it is. Yeah, there. Bed prep, laying plastic, planting, staking, pesticide applications, fertilization, hand weeding. You've got a category for all your job titles, all the specific roles that they're doing. Um, and then they code that in. There's a lot of nuances as to how a lot of people do. Jay, you talked about you had a badge system.
Absolutely. Yeah, so we had it was Fresh QC as the company, and it was initially sort of a traceability um, decision on part of the farm, but I really quickly realized that it had this other element to it, which I could have my crews. Each crew member had their own individual name tag, and we had labels that we could put on every case so that I could scan their badge, then the case, and then at the end of the day, I knew how many cases, when, how long it took. It was great for harvest information, but I could also create badges for those other categories, the pre-harvest work, and it could get specific, um, you know, uh, by crop and by, sort of if it's post-season, is it pruning? Is it general maintenance? Is it preseason? Is it planting, whatever, and planting blueberries or whatever. So there are tools like that. And then there's I was going to share, I think it's Airtable is a resource that Wild Hope Farm. I worked with them on some costing stuff last year,
Oh, that's
and
great.
um, great folks there, and they did a carrot study. And they were looking specifically at greenhouse versus transplant production, which is, I guess, that's a little bit out of my space. I'm not a carrot grower, but again, they did the same thing. They laid out like, um, what are we doing?
What the major
Notice,
activities? Yeah.
yeah, cultivate twice, so, and then we're getting into this undercut harvest, and then, again, listing it out every which way, and then as you can see, destroy crop, that sort of after harvest field work. And then they've got this system that, again, that they've worked out, to where they can clock in by employee, by activity, zone, crop.
Wow, look at that. It's
And
impressive.
so this is that data piece of, like, being able to measure it and being able to manage it. I just wanted to share that because I think they do such an excellent job at of all this, I also want to say that Peanut from Wild Hope, said there was a surprise realization from doing the time studies, and they decided to invest in an automation on their tunnels and save on that labor piece. So can lead
Good.
this stuff can lead to innovation, right, Derek?
Jay, what did they spend in order to be able to do that,
On
to track
the
that?
what
Because
did
I
they?
think one of the things I'm thinking about is like, you're on this call and you're saying to me, okay, well, I need to figure out a system to track my labor. In order to do that, I'm going to have to spend some money, and it
Hmm.
might be the best money that you spend.
Hmm.
Um, or even like a system to track my own labor, because it might be the best money I spend, because I will decide my crop selection based on um, I'll decide my crop selection based on where I want to spend my time. Um,
Hmm.
so like if you were going to invest in a system, and you've worked with growers who've done this, so how did that look?
Yeah. Well, I mean, so from my experience, you know, primarily a wholesale farm business, for a berry farm, small 10-acre farm, so not a big operation, but I invested $1,500 a year in that badge system that I described. And it had great customer service. And again, I had a wealth of data when I used it. I don't even know if it's the cost of, again, it's that new habit thing. And I think it's really the cost of whatever system you use. It's just going to be the cost of relearning something and sticking to it, I think. But in terms of hard dollars, I know some folks that are spending $50 a month or so for this kind of like software. And then the work of doing it, again, like in the case of Wild Hope, this is part of their operation. It's part of doing the job. So I think they've done a good job at, again, the culture of, this, this is part of our work. And it's worth it because, you know, we're making improvements based off of the information that we've gathered and not just guessing. I think that's what I got
Yeah,
from them. So does
that's
that
good.
kind of help, or you were looking for maybe some more hard numbers?
No, I just generalized considerations of like, um I, I don't know what Matt, for example, texted, is there enough data out there for small growers to realize what thresholds are for investments? And
Mm,
I think that's like each grower is going to be a case study. And so I think the beginning part of this work is to put it on paper, and then let's see. Um, let's try to see if we could change labor cost by 10%. What does that have to do for you? How would that change your operation? Or um, if we could uh, if we could focus, let's just say you're the main labor source. If we could focus your time and attention on these three crops as opposed to these 10 crops, like how would that change your profitability? And then what would then let's consider the marketing outlook. So um, it's a process where we go in phases, and then we try to start to answer these questions one at a time.
I'm working with a group right now of growers, and we're all at different levels with this. Um, I think that it's easy to get overwhelmed, and again, like I said earlier, look at a spreadsheet and think I've got to do all this. But
Yeah.
it's an elephant, and we got to eat that elephant, one bite at a time.
Well, thanks to everyone for coming tonight. Um, Feel free to follow up with me or follow up with Jay personally. You guys need some additional help. I do One of the things I would look forward to is like trying to take a fixed cost example and then add multiple crops to that example based on some real scenarios. So if that's something you want to do, free to reach out.